Welcome back to Business Week here on Arise News. Now, a total of $2.4 trillion investable wealth is held on the African continent, with South Africa, Egypt, Nigeria, Kenya, and Morocco accounting for more than half of Africa's high net worth individuals. Now, this is according to a recent Henley and Partners Africa Wealth Report. Statistically, the wealth management market in Africa is estimated to grow by 60% in the next decade, driven by strong asset under management growth in most major markets. This presents a good opportunity for middle-class Africans if given access to the same wealth management options made available to high net worth individuals. Joining me to discuss this in detail is Kola Oyenei, who is the CEO of Opportunic Global Fund, a Cayman Mauritius licensed private company. He's also the founder of Vinia Group, a venture creation and investment company. Kola's work cuts across fund management, corporate finance, human capital development, and value-add deal creation. I also have here with me a leading expert in the financial services space, Abiola Adekoya, who is partner and co-founder at Genia Family Office and lead wealth advisor at RTS Capital, a boutique wealth advisory firm. Thank you for joining me this morning, Kola and Abiola.
Thank you very much for having us here.
Thank you for having me.
All right, let's begin. There's quite a lot to go through, and I love this topic. It's a very interesting one. But let's begin with you, Kola. Let's begin with this report from Henley and Partners. Now, this country's highlighted South Africa, Nigeria, Egypt, Kenya, Morocco. These are pretty much the big five wealth markets. They're accounting for about 56% of high net worth individuals on the continent. What's it going to take for the other countries to catch up?
So I think it's going to take the same thing that the rest of the countries have done over the years. And there are three main things. Number one is the ability to unlock opportunities. I typically always say that you don't create wealth by fighting poverty. You create wealth by unlocking opportunities. And so one of the things that all those other countries have to do is to start unlocking opportunities, some of which we're talking about here today. The second thing to do is to really just create an enabling environment that encourages, investment opportunities to actually thrive. The more confidence that, the market has in investing, the more people really want to hold their funds. Because if there are 2.4 trillion investable monies or capital in place, then that means that somehow there are people who are holding that capital and not investing. And then the third thing that needs to happen is really just creating a level playing field for both retail investors and institutional investors. That hasn't always been the same. Because typically, unless you have a huge ticket size to invest, you don't always get, you always get the shorter end of the stick. The third thing that needs to happen is for wealth managers, fund managers like us to begin to really create a table that is really leveled for both institutional and retail investors to invest.
So that wealth is there, just needs to be well navigated.
Absolutely.
All right, so let's come to you, Abiola, talking about this notion of wealth building. And of course, its importance for both individuals and economies. Let's talk about what you say the key impediments to unlocking wealth is for Africans.
I think there are a couple of factors, and I think the first factor really is lack of financial literacy. I think that's really high on the list. I think that in the urban areas, there's a higher level of financial literacy, but as you get into the more rural areas, there's definitely a lack of financial literacy there. I think the second point then would be democratization of assets. So right now, a lot of the investable assets are largely skewed towards a certain type of client, retail type. There's not enough access for mass market, investors to take advantages of some of those opportunities. And I guess finally, it's just we're not leveraging the digital platform space enough to be able to allow some of these mass market investors to be able to access these opportunities. I think if we're able to, harness any of those three issues, address them adequately, I think we'll definitely see a higher penetration into investment from the overall populace.
Do you see the appetite there for it in terms of more people adopting that positively?
Absolutely. I think there is definitely, more people looking towards that. We've seen quite a huge takeoff, particularly in the younger generation, of some of these digital products. And I think that if we can roll that out across the country, I think we'll definitely see more penetration in the markets.
All right. I mean, of course, that will bring us to color because, of course, that's where your work is coming in. Mm-hmm. Your platform has just recently announced a private retail fund. Could you give us some more color around the structure and the offerings around that?
So basically, Opportunity Global Fund, we recognize three major things that we felt were the major barriers to increasing wealth opportunities or wealth creation opportunities in Africa. And I would, for the sake of just everybody remember it as ARR. A is access. We believe that one of the major issues that have happened over the years has been the lack of access to really investment opportunities that really, that is exciting and appealing enough to retail investors. So typically what most people get is maybe 2% return on their investments, on their hard-earned money. Now, when they want to access global investment opportunities that could potentially return more, but because of the color of their passports across the African continent, the KYC process, the DD process, systemically actually excludes them from coming into those funds. So we thought that it was important to create a fund that really focuses on Africans and Africans in the diaspora to literally be able to come in. The second thing is risk. One of the things we've seen across the African continent are three things that retail investors or mass affluence or middle class deal with. One is inflation. I heard you just speaking to that earlier on with Laura, that yes, even after you've really gained the reward on your investment, is eroded by high inflation rate. The second thing, and we've seen this across West Africa, currency risk that retail and mass affluent do. We thought that could we create a fund that would really factor in the currency risk, the inflation risk that exists on the continent, and then the third one is political risk. There are countries right now where investors are just holding their funds and not looking to make any move until they are sure about what is happening in the political environment. And then the third thing is, which I believe is extremely important, is reward. Reward for me is about how do we create a fund that ensures that if institutional investors are getting 10% return on their dollar, retail investors, you and I, could also get 10% return on a dollar. And what we've done is to be able to create Opportunic Global Fund to be able to address those three things by literally providing a platform, which is opportunic.com, where people literally can just go in for as minimum, as low as $5,000 and a follow-up of monthly $1,000. You can actually access a fund that typically you would have needed $100,000 to $50,000 to be able to come into. So for the first time, Abisola, you can now actually sit with a wealth manager as a retail investor, as a middle class investor, and access the same thing that a blue chip institutional investor would access over an investment period of time. So for us, that's what makes it interesting.
I'm glad you mentioned that, because I was wondering, considering the fact that institutional investors are better positioned in terms of driving investment returns, why would you go the retail investor route? But I think you've added some more color to that. And hopefully, I'm just wondering about the feasibility of that working out based on the mindset out there around it.
Yeah, I think one of the reasons why over time institutional investors, I call it traditional investors, have been able to do that is because there were infrastructures that have been built to enable that to happen. Now, for us, we feel that those traditional infrastructures are really expensive to serve retail investors. What we've done is to create an innovative infrastructure that allows for this to happen. And what that does is leveraging teams across the entire continent, from Kenya to Nigeria, Zambia, Mauritius, who have decades of experience in fund and investment management. The second thing that we've also done is to create a platform, as you were speaking to earlier on, a tech platform that literally, rather than really going through a broker-dealer or the traditional route of investment, or even needing a wealth manager, is to being able to go online and actually access that. What that does is reduces the cost of overall management of the fund. And when you reduce the overall management of a fund, you can return a lot more to investors. So retail institutional investors tend to really be expensive in terms of operational costs, so they're able to return very little to retail investors. And interestingly about OGF as well is that it doesn't lock out institutional investors who are African focused, because they are also serving retail investors. So we are currently
there's room for that as well.
Exactly. We're currently also onboarding them on the platform as well, because they see us as, wow, this is potentially a potential partnership that would help them hit their own return promises.
So the parameters already in place. That's very refreshing to hear. But you mentioned wealth management, which, of course, Abiola, this is your thing.
Absolutely.
We want to look at, there is a lot of misconception, a misunderstanding around the ideas of wealth building as opposed to wealth management. It's almost as though you need to achieve one and then work on the other. What are some of the key cardinals here? You spoke about financial literacy as a bedrock, which, of course, without financial literacy, you don't even have throwing darts in the air.
Absolutely.
Could you speak to some of the cardinals around both of them?
Okay, so wealth building really is more geared towards the retail end of the market, and it's really just about having a long-term focus and sort of having a financial plan and investing in various assets that would help you to create wealth over a period of years. Now, wealth management, unfortunately, is very niche. It is focused primarily on ultra-high net worth individuals, successful entrepreneurs, and essentially people that are looking to preserve, protect and position their wealth for transfer to the next generation, which is what Genia Family Office does. So what we do is we help our clients build existing legacies for the next generation. And by sitting with them, we create a plan where they're able to share with us their goals for the next couple of years, and then we help them to actualize those goals. Across wealth management, one of the things that we do is to provide structures that allow that wealth to be easily transmitted. We also help them to, create structures that allows it to be protected against, economic changes and also jurisdiction as well. Because what we're seeing now is that it's not enough to just have wealth in one country. Most successful people have wealth across various countries, and there's also the tax implication that brings about. And so what we do at Genia, we sit with you and we help you to look at those, look at what you have existing and help you to create structures that will help you to protect some of the assets that you currently hold. And I think it's something that is gaining popularity, not only in Nigeria, I was just saying to Kola earlier, but also across Africa. There are a lot of successful families and successful businesses that have become part of a stronger part of the economic ecosystem, so that it's not just enough that we, just they're in business. We have to find a way to allow those businesses continue into generations, like we have it abroad, where we have companies that have been existing for over 100 years. I would love to see that in Nigeria. I would love to see that in Africa. And I want to see that also with Black-owned businesses. I think it's something that is really important. And that's what we at Genia want to do. Want to help families and successful businesses build legacies that exist not just for now, but that they can pass on for 3, 4, 5 generations.
I think that's extremely interesting because, of course, that's really the start of everything. But I'm curious to know, what are your findings around financial literacy or the quest for it in Nigeria? What are you finding more people? And I'm talking across demographics, of course. You might have people who are more savvy in terms of wealth building. Are you finding more people interested in that?
I think there's definitely a lot more interest in financial literacy. I think the economic conditions have made that very important. I think what we're also seeing is that the younger demographic definitely have a higher, interest in it, because they're more concerned with trying to grow their wealth and trying to sort of live life in the moment, and they sort of require funds to do that. So they're definitely more interested in that. The older generation are a lot more risk averse. So, while wealth creation is important for them, they're just looking to sort of sustain themselves to the next generation. So I think that one way that we can definitely push the financial literacy, agenda is to make sure that we not only, while we're educating in the urban areas, we also take that education to the rural areas and leverage things like mobile money, which is just kicking off. Hopefully we have insurance products that could be attached to some of that mobile money initiative. We have health insurance products that could be attached. We have investment opportunities. So where, Kola is providing to mass affluent, we have at that level, we have, being able for them also to be able to access, mutual funds with as little as 100 naira, 50 naira a day. That would definitely make a lot of difference in their lives, because those monies definitely grow and, at the end of the year can be aggregated and be quite substantial for them.
Absolutely. So we're seeing trends change, and we also have to find ways in which institutions can plug in to help speed this up. All right, we will have so much more to talk about, but it's time now for a quick break. And when we return, the discussion around wealth building and unlocking Africa's investment potential continues. Stay with us. All right, you're watching Business Week here on Arise News. I've been talking to Kola Oyene, CEO, Opportunic Global Fund, and Abiola Adekoya, partner and co-founder, Genia Family Office. Let's carry on. We still have quite a bit to cover. And I want to look now at the global investment space, Kola, in relation to risk management and volatility. You touched on risk briefly earlier. We've seen some funds commit to like a 10-year period without even looking at asset classes. How are funds protecting and indemnifying themselves against shocks? Unforeseen shocks?
So I'll speak specifically from our perspective, because things have changed quite dramatically since COVID. Actually, there are two major events over the last maybe two decades, about 15 years, between 15 years and now, that really have changed the way the investment landscape is. 2008 financial crisis shook pretty much everyone and everywhere. 2020 shook everyone and everywhere. So market tumbled. And again, we had correction last year, 2022, at the very early stage because of the US Fed interest rate to correct inflation. So we're in a season where portfolio and fund managers really have to become dynamic. And that's our approach. So what we've done is to really be able to design a very dynamic portfolio of different asset classes that is not overly concentrated on a particular thing. So we have an investment policy that doesn't allow more than 20% of our entire portfolio to be invested in any asset class in particular. So we spread across maybe 5-6 different asset classes, but not just even focus on that alone, but to almost on a monthly basis with investment committees reviewing that portfolio of asset classes. The second thing is governance, and I think that not just our fund, I've seen this across global funds as well. We have 4 layers of governance for the fund that really ensures, risk management. At the internal first line of defense is the internal fund management team that ensures that, again, the risk-reward distribution of our funds across asset classes is looked into. And then the second layer of that is our internal risk team, ensuring that whatever the fund management team are doing is actually in compliance with our risk management framework. And then the third part is to then ensure that we have our fund administrator. So again, Aquivice is based in Mauritius. They have $216 million asset under administration. So again, providing a third layer of our fund. And then the fourth one is an external one, our board. Again, overseeing quarterly all our investments in a quarter. And then a small part of this, which is more part of the operational team, is investment committee. That's what we've done internally, and we're pretty comfortable that essentially allows that for whatever volatility or shock happens to the system, we're able to absorb that. But can I say to you, Abisola, is that actually in volatility, funds like us tend to do pretty well because we have an internal trading desk. So what that trading desk also does is that, when they have, this with our volatilities, we make returns for our investors either way. So when the market rises, when it falls, that's when traders also go to market. And we trade about 3-4 different asset classes: fixed income products, commodity products, equities, and FX. And what a time to trade FX, what a time to trade even equities right now. And we have some interesting commodities across African continent that people haven't been looking into for a long time. We see that as an opportunity. But so by the time you combine all of that, we believe very strongly that the dynamic asset management and portfolio management strategy that we've adopted would withstand, periodic shocks that we have seen in the system over the last few.
So it sounds like you already have a shock proof. It's almost a win-win for you.
You have to. That's the only way to survive.
Which is a good thing, Ola, which is a very good thing. But I'm still going to stay on risk, Abiola. Let me come to you. In addition to currency and political risk, which Kola mentioned earlier, and I think you touched on that as well, let's look at some of the challenges plaguing the investment space for African investors who are seeking global investments and vice versa. Absolutely.
Something I'm very familiar with, my background in stockbroking. And one of the risks that plague Nigerian investors seeking global opportunities is really the KYC, and the enhanced due diligence is really stringent for Africans, especially Nigerians, and that can potentially be a challenge where, opportunities will pass you by just because you're trying to do KYC. And then the other one that is also a bit of a challenge is also, the structures available for us, which is always a bit more expensive. It's not as dynamic as one would have hoped, as opposed to if you were national of some of these countries. And also the kind of products that we're able to have access to. That is also something that, we don't get to see a lot of that. Nigerians particularly and other African, investors don't get the opportunity to have. Now, on the flip side, for, investors looking to invest in Nigeria, I guess one of the key things would be currency volatility. I mean, I don't need to talk about that. I think we all kind of have an idea. But that definitely raises concerns a lot for investors looking to come into Nigeria. I think it's not exciting for them when, you can bring in funds and you can exit, with your funds, in a way that, that is robust and, logical for you. I think the second part also is liquidity. The Nigerian market is definitely a very small market compared to, the more developed markets. So it means that when you want to exit a position of like a holding of about 5% in any sort of investment that you've made, to find a ready buyer is always a bit of a challenge. And that liquidity means that you're locked in for much longer than you would want to. And so that lack of flexibility of being able to exit your positions is definitely something that, that they don't really appreciate. And I guess finally, costs. It's quite expensive, doing business in our climb. The cost of transactions is definitely quite high and also makes it very unattractive for them to come in. And I guess also tapering returns, right? So, returns are not as attractive as they were. It means that by the time you come in and you're going out, net, you may not have made as much money as you would have hoped to make. And so all those factors make it slightly unattractive for them to be in Nigeria. But I do think there's hope. I feel that, we're definitely well positioned, as a country. Of course, given that we've just, we're going into a new political dispensation, I feel like that brings a bit of hope for investors looking to enter Nigeria. And I'm quite excited about those opportunities.
All right, sounds like a very positive outlook. I think one thing we can all agree on is that perception plays a very critical role in both climes as well, in and out. Kola, would you agree? Do you have a positive outlook? We're rounding up, so what's your, very quickly to wrap up?
I do agree. When you look at even what is happening from diaspora remittance, which I'm very excited about, 98 billion remitted to African continent to 2022. 25% of that came to Nigeria. So remittance is still big. It's an investment opportunity. We're seeing how remittance can become investments as well.
Right.
And so we feel that after, for instance, for Nigeria, after May 29, investors hopefully will start opening up. And as long as the rest of the African countries manage their risks, like Ghana, Anko.
All right, well, let's keep it on a positive note and look out for that silver lining. I want to thank you so much, Kola Enei. Abiola Adekoya, thank you so much for being with us on the show this morning.